Welcome back. Let's talk about another very strong debutant on Dalal Street, Gandhar Oil Refinery. The stock straight away listed with a premium of 76%. The issue price was 169 and the stock listed at 298, and it's only climbed higher from there and now at 309 rupees. To talk about the way forward, we're joined by Aslesh Parekh, the Joint Managing Director at Gandhar Oil Refinery. Now, Aslesh, congratulations on a fabulous listing. Now that you're listed, can you give us an indication for your shareholders what the growth for the company is going to look like? For the last 3 years, your CAGR has been about 40%, though the profit growth has only been about 12%. So two-part question here. What could be the growth rate for the company going ahead? Is it a 15-20% kind of a business model that you should be able to sustainably see? And two, do you think your profit growth will be able to keep, move in step with the top line growth?
Good morning. Thank you for inviting me to the show. Obviously, yes, I would first of all thank you all the shareholders, for trusting the company and investing at Gandhar. Coming back to your question, yes, we have shown a stellar performance in the historical past. Even going ahead, we would like to focus on our strategies in terms of growing across geographies, gaining new customers, and increasing the wallet share with our existing customers. So apart from the growth, we will be focusing on the personal care, healthcare, performance oil division, where the focus area of Gandhar would be. Obviously, company has shown a CAGR of 40-45% over past 3 years. The endeavor would be to continue the growth, but obviously there will be support system this will be required to carry forward this growth. Coming back to the profitability, yes, with the listing completed today, obviously there will be some fresh inflows of capital in the company. We are also repaying some term loan which is there on the books. Obviously that will, we can do the maths in terms of the saving that company would do in terms of the interest part of it. And obviously with the focus on the personal care, healthcare division, with the quality customers that we have, we will be in a position to, we will try our best, to give the same growth that we've seen in the past.
So, Aslesh, talk us through a bit about the profitability and the margin profile of the company, because as my colleague was just pointing out, that at the top line you've been growing, at a very steady clip of 40% plus. But the EBITDA margins now, I think FY24 you were close to 7.8, 7.9%. Is that the peak margin for your business, or do you think you have the levers in place now, as you mentioned, better customer profile, different product mix? Can you take that margin to say 10%?
See, normally, we we would like to focus on gross margins per kiloliters. The company has been, giving a steady growth of gross margins per kilo of 11,500 to 11,800 per kiloliters, across 3 financial years. Having said that, with the profile of the PHPO business, from the overall revenue stream going up, we anticipate, the profit also, we are trying our best, to increase our profitability going forward.
So, okay, even if you talk at the gross margin level and not the EBITDA margin, what is the increase? I mean, do you see, let's say over the next 1 year, FY25, can you increase it by 50 basis points, 100 basis points? What can you guide for?
See, currently, as I informed you, the gross margins are around 11,800 rupees per kale. The focus or the target within, within the group is, to reach around 12,000, 12,200 per kale, in the near future. So, company, will be trying its best, to achieve this next growth target at the earliest.
Okay, all right. I'm sure your shareholders will like that quite a bit. Let's talk about your working capital cycle, because the working capital days, they've increased. FY21, you were at 19 days. FY23, it's 31 days. June of 23, it's 46 days. So why this increase?
See, working capital, as of 30th June was 46, but it is a number as of 30th June. But if you see overall, the inventory that Gandhar has kept is not more than 35, 37 days, even if you go to the historical past. Company has never crossed the inventory of 35, 37 days at the most. So the idea is, to ensure minimum inventory and optimum debtor level to ensure, services to the customers are given on time.
Okay. I'm just going to take out a question which, our in-house analyst, Sonal, she pointed this out. I think this came up during one of the analyst calls, that the company's promoters, Ramesh Parekh, Sameer Parekh, and yourself, put together receives 7% of the profit after tax as the remuneration. So, I mean, how is this calculated going forward? Is there a committee in place? And will the top-level senior leadership remuneration be at this level of 7%? How do you arrive at this?
See, the remuneration committee is in place, obviously after the board has approved the remuneration which has been paid to the promoters. I mean, apart from that, the modest, this is the modest amount that has been, withdrawn from the company. That's it.
Okay, fair enough. So, I remember we discussed this last time as well, Ashlesh. You're, of course, undertaking a lot of capacity expansion as well. So, leave us with an outlook in terms of overall volume growth. How much will you do in FY24 and what would your target be for FY25 as some of this capacity starts coming on stream?
See, we are doing a capacity expansion in both our facilities in India, in Taloja and Silvassa by around 100,000 kiloliters in Taloja and around 18,000 kiloliters in Silvassa. So the capacity, will go up from current 522,000 kiloliters to around 630,000 kiloliters approximate. And we anticipate, to use this additional capacity over next 3 years.
Okay, and that should translate into how much of a volume growth? If you could just give us, a rough increase, will it be up by 10%, 20% as this new capacity comes up on stream?
Yeah, so volume growth will be in the range of 10-12% once the capacity is on stream, and if you the incremental capacities that are going up would lead to an additional revenue of around 1,000 crores.
Okay, so that takes care of the volume part of it. Now let's just talk pricing. We want to understand how frequently your contracts come up for price renewal. Is it an annual thing or how frequent is it? And when is the next renewal?
Yeah, so the contracts are renewed on annual basis. It's a volume fixed contract, and the pricing are floating as per the index. So the renewal of the contracts will come, if the negotiations are already in place, are already ongoing, for the coming year. So from January onwards, we'll be having a new contracts.
So, and describe to us the price dynamics in the market now. White oil, I mean, what's the input situation like, and what is the kind of price increase that you would hope to renegotiate?
See, if you see white oil, as a product is expected to grow at a CAGR of 10% over next 5 years. So there is ample opportunities within India. And at Gandhar, we are not only focusing on India, we are expanding our footprints globally. Today, we are successfully exporting to 100 plus countries, and more than 40% of the revenue is generated from exports. So we are well poised, at the current scenario, to take care of the growth within the country as well, and also from the overseas sales.
No, absolutely. I'm just trying to understand the pricing bit. I mean, how you said the contracts are renewed annually, once every year. So in between, if there are any input commodity shocks, I mean, oil prices scale up or something happens, then what happens? Do you have the leeway to take any midterm increases or pass on any input shocks to your customers?
Yes, with a few of our customers, we do have price pass-through contracts wherein, the pricing is benchmark as per the raw material index. So there is a linkages of the raw material as well on the price of on the contracts that we have with few of our customers.
And so this is only a few.
Increase in the raw material price can be effectively passed on to the customer.
Okay, yes. That's great because that will insulate you.
We do have spot pricing in.
Yes, please continue. Please continue.
Yeah. So what I was trying to tell you, with few of our FMCG customers or and the customers under the personal care healthcare division, we have price pass-through contracts which insulates us from any upward or downward movement in terms of the raw material pricing. And with other customers, we have spot pricing fixed every 15 days. So whatever changes in the raw material or dollar rupee movement can be passed on to the customers.
Okay, great.
And
so you seem to be
we have more than 3,500 set of customers.
Sure. Got that. So you seem to be, reasonably well insulated from any input price shocks that may happen. Finally, Ashlesh, as you mentioned that 40% of your revenue is coming in from export. So which market is growing faster for you, India or the overseas market?
No, both, we are, growing in both the markets, but, obviously exports is, filing, more cylinder. The growth from exports is far more than the domestic growth that we are seeing in the company as of now. Going forward also, the focus of the company will be on the personal care, healthcare division and focus on acquiring new customers and grow with the customers. So, it would not only be confined to India, but, globally as well.
Okay, and one final point, I'm just going back to pricing. You explained to us quite nicely on the input front. Now the price renegotiation that's going on for the next renewal, are you expecting an increase in the contract value? What are the prevailing price trends like? Can you push through a 5% increase, or I don't know, maybe 10%? What's the expectation?
See, it's difficult for me to discuss the pricing because of the confidentiality terms. But the discussions are already underway with few of our customers, for renegotiation of the pricing for the coming year.
Okay, I think we'll just then wait and watch and see that show up in your numbers in the next quarter. Thank you, Ashlesh, for joining in. Once again, congratulations on a great listing.
Thanks a lot.
Thank you. There you have it, the second big mover of the day, big listing, and an 82% gain on Gandhar Oil. They make a lot of specialty oils, with white oil being one of their big products. Well, that's a lot of